Pleased to say that we're joined by Tyler Vernon, who is the CEO of Biltmore Capital Advisors, and he joins us from Palm Beach Gardens, Florida. Great to have you on the show here. Thanks for your time today. Give us your assessment of what is happening in the way of U.S. markets hitting fresh records at the exact same time that anxieties are running high about the economic toll from this coronavirus, not just here out in Asia, where I can tell you it is front and center of most minds, but also given the multinational companies we hear stepping up warnings about supply chain disruptions.
Look, I think investors here in the United States are focused on what's happening here in the United States. I think they've done a great job of containing this virus with some of the quarantines that have been put into place. And when we look at earnings, earnings are really surprising on the upside here in the U.S. We see earnings that were expected to really come in negative that are beating for the fourth quarter. So I think we were looking for about a 1% down, and now we're about to get 1% on the plus side year-over-year growth. Addition to this, I think we continue to see an economy that's expanding. We saw that with the industrial numbers. We're having a Fed that's going to continue to keep rates low. Earnings are just blowing out of the park by about an average of 5% earnings beat. So at the end of the day, investors are focusing on this optimism. They focused on the stimulus that China has put into place, and they don't want to be left out of this market.
Yeah, so then you hit at this idea of almost the fear of missing out, the FOMO, emotional psychology that is driving some of these investors. And I just want to go back to what you were saying, too, about earnings and how this reflects what's going on with the strong economy, because we are hearing some comments as we speak from the Fed's vice chairman for supervision, that is Randall Quarles. And he's still talking about inflation, though, saying he's not convinced that consumer inflation expectations are declining. But he's also saying when it comes to further easing from the Fed as well, I mean, there's some question marks as to whether or not that will actually boost inflation. Is this a problem that growth has been relatively strong, that the employment picture looks so good, but the Fed is still frustrated by sluggish inflation?
Look, I think things could be a little bit better here, but I think this is what markets want. They want low inflation. This isn't good for Main Street, but this is great for Wall Street. We're not getting wage growth. We are seeing corporate earnings pick up. The consumer in the U.S. is just on fire. I mean, we're buying from our little gadgets. It's so easy to buy anything that's out there. And I think as a result, we're seeing some kind of cut already priced into the market. So the inflation expectations have not hit the levels that the Fed really wants. And as such, I think they can continue to stimulate should we get some kind of bumps economically here.
Right. Tyler, yesterday China came out saying that they are slashing their import duties. How much of a booster does that offer to U.S. exporters, especially, when it comes to the agricultural products and other related allied products in that whole trade equation between the two regions?
I'm sorry, it came over a little funny. Can you please repeat that?
No, I was just asking about how much of China cutting its import duties acts as a boost for the trading equation between the two countries.
I think it's more an impact of, this has been such an issue over the last 12 months. And here we saw the phase one go through. That was reacted very positively here in the United States. So when we saw this news this morning, the market just jumped up. I think any kind of tension relief is very much welcomed here in the U.S. markets. And I think they took a great step in the right direction. And if we could see the U.S. continue down that road. So I think this is a real positive. I think any relief to the trade war is looked at positively, not only here in the U.S., but in global markets.
Right, and so how does that filter through into some of the trade-related stories? Are you bottom fishing in some of the trade-related names in the United States, the industrials and related stories, aside of just the consumption theme that's been so front and center for investors to make money in?
Look, I don't believe in this relief rally that we've seen, at least in Asia. I think we're going to see a lot more impact over the next couple months as really the result of this coronavirus economically as the numbers come out. I mean, when we get the kind of quarantines in Asia that we have, 60 million people in China, I think there's going to be some more supply disruptions for U.S. companies that really haven't made great contingency plans. So I think the markets have really, we've seen a boost. They've really looked beyond this coronavirus. But I think we're going to see a better opportunity to get into some of these names. I mean, look at Nike, for example. I mean, Nike came out and said they're going to be severely affected, and the stock barely dropped. So I really don't think we've seen the end of this story, and I think you're going to see a lot better opportunities down the road.
Yes, Tyler, and I mean, when you're talking about what could happen, many are looking to the energy space, also some basic resources plays as well, because the energy has been hard hit, but now we understand it looks like OPEC Plus is getting ready to take some measures. I mean, how do you approach the energy space?
I think we should shy away from energy. Certainly having some exposure makes sense. It's a big chunk of the U.S. economy. But I just don't see a lot of positive things that are going on in the energy space. I mean, supply is continuing to increase. We have all these technologies from horizontal drilling to fracking where we're energy independent here in the United States. OPEC is just, they can't control the prices that they used to. Because of what's going on in China right now, we see demand being reduced by about 4 million barrels a day. I think the story here for energy is going to be lower prices for longer. And big integrated oil companies in the United States, that's not what they want. They want higher prices to really push their profits. In addition to this, we have this whole push with the millennials and other generations to this green energy. So I just don't see a lot of things going on. Prices are down about 20%, 15% for the year. I just don't see a lot of wins in that sale. I'd much rather be in other sectors like consumer discretionary or technology.
Okay. And you seem to like U.S. REITs as well, but afraid that we're just out of time, so we can't carry on this conversation. But thank you very much, Tyler, for taking out the time to speak with us this morning. Really appreciate your thoughts and your insights.